Hey, what's going on? I just want to go over a couple of these plays that we had for the week and show you how they started and the outcome of them. So this first play that we had was on EA. It was an entry over 140.20, and the target is ultimately 151.30. Now, the ultimate target is 151.30, saying that this is a continuation play. So the first target out of there was roughly 143, and we hit that target. Now, I didn't list that target down because I wasn't sure how fast this was going to move. And when I don't know how fast something's going to move, or I'm uncertain of how fast something's going to move, I tend to just say buy the shares instead and hold for the target or for more of a long term situation. So, looking at this right here, um, we had Monday start off, and we had just crossed into this 138, 139 move. Once we crossed the entry of 140.20, and if I look here, it happened on the 12th. We had 140.38. So once that was triggered, we could have found a position or found an entry to the position and played it out to what the next target should be roughly, and ended up being 143. See, we popped up here and then it pulled back again. So that play right there, from, I guess we'll take it from this point, the 140 point, which would be this one, all right? 140.20. So let's go down 140.20. See if I can move it afterwards. But 140.20, $2.35 roughly, that the move was up before you could have took your profit on that one. So that was a nice $2 move right there, right? Let's check out the next play that we had. We had Joby or Joby, however you want to pronounce that. This play right here, we had this ascending triangle here before it even ended up breaking out here. We also had this down channel that you can see here. And then I just threw some extra trend lines on here to show that we are moving up, basically making this V here, right? And my idea for Joby was, it looks like it's a nice setup to break out towards $12 in the near future, but the initial breakout should take the price to about $8.50 to $9. And right here, again, we can start on Monday. We started down here at 6.51 or $6.51. We had more of a pullback than we had the FOMC talk. I believe it was FOMC when Powell was talking the other day, and price shot up. Price ended up closing at 6.75. Then the following day had a big move up to, well, let me just look at the numbers instead of the chart. Had a big move up to $7.60 roughly. a little shy of our target of 850, but we're not finished yet, right? So we'll have this pullback, and then we should get another bounce towards this $8.50 target. Just a side note, when I chart, I'm charting for the long run in most cases, and not what to make overnight or in one day. Market, and I happen to be able to catch it, then we'll talk about a quick move for the day or just that moment. But in most cases, my charts are put together to give you a bigger risk to reward, right? We want from the bottom to the next local top, or from the local top to the next bottom, if that makes any sense. So let's check out, let's go down, and I apologize. I took the Joby one off the copy one, but it's right here, right? And this should say should, not shout. But let's go on to the next one. So we did, and this was my big play for the week. This play is what brought me back the most money for the week. Now, BlackRock started off below 760.43. So let's find where BlackRock started at. BlackRock started right here. So we were in this consolidation right here. I said if BlackRock gets over 160.43, which I want to believe was this mark right here, right? I said that BlackRock would just start taking off, and 775 to 785, or 780 to 785 was more or less my target. I ended up getting into the 775, and this thing took off, right? It actually looks like it's still taking off. Ended up getting out a little early, but definitely made over 3,000% on this play. So as well, and worked out for the better for anybody who got into it. Then we got Baba. Now this Baba play ended up being just a play for I think for one day, and then we had this crazy bounce out of here. So what I thought was going to happen with Baba was that we were going to follow this downtrend down, and as you can see, I have this mark here for Baba crossing down. I'm going to go below this line. Baba actually bounced off of this line instead of going below it. Now, what I'm thinking is that Baba is going to come back down from where it's at right now. So if I zoom into, let's go to like 30 minutes and see what we're looking like. Okay. So again, like I said, I look at these plays for longer term and not what right here in the day. So I'm looking at this broadening ascending wedge, right? And I'm thinking that we should possibly start to break down from here. Right here, like 74.61. We ended up going a little bit over that. In the process of going over that, we ended up right back below 74.61. So to see if we end up breaking this and coming right back down into here for my original thought of 65 to $64. But the 70 put did work out from Monday. So if we go back to the daily, and I was in this as well, and I ended up getting out of it. But if we go here to the daily, let's find Monday here, right? So Monday, and Monday started off, here we go, coming down. So it dropped down first before it recovered. So when it dropped down here, this was our take profit and everything. But then it recovered that same day. I didn't really think about that after it recovered or paid it any mind. I took my money and I was on to the next play. I didn't think that we were going to bounce and break out. So I'm going to look into this again. But since we do have this broadening wedge, like I said, I want that this is going to break back down. Now, the other scenario is that this doesn't break down as far as I think it's going to break down, and we end up breaking down to right here to like $71.45. So just keep an eye on this one, and we'll see what's going on next. This right here, this I was a little off on, and this was just a possibility. I didn't even really stick with this thought. Tesla. So Tesla didn't work out. Well, okay. Yeah, I didn't put any targets here for Tesla really. But Tesla worked out at the beginning, but what happened at the end of the week kind of faked me out. So I thought Tesla was going to really dip at the end of the week. So let's go to Tesla real quick. So my thought for Tesla was that it was going to hit this area right here. It was going to pull back, right? And then go up here. And this is still a possibility. So 240 isn't off the table for me as yet. I'm still trying to see what's going to happen with this. But right here, we do now have a new fair value gap that is bullish. And it is a possibility that this can take and go further up. The only thing that I'm not too certain of would be that this bar high was 253.88 and the high on this one was 254.13. So this may not bounce back down, and it may make this next move up to about 775 before it has that pullback that I would think is necessary for it to go up to the next leg. But we're just keeping an eye on that for now. Also on this list, so that was Tesla, was DPST. So with DPST, I had a target marked out on that. So the target for me on DPST was actually 112. Didn't make it up to 112. I think we got like 110, if I'm not mistaken. 107. So we got like to 107. Now, as far as DPST goes, my intention was never to trade this actual ticker. What I did with DPST was I looked into the holdings that were behind DPST. Now, if I'm not mistaken, I put those in the chat room as well, right? So if I scroll back up, the DPST one. Sorry about that. That's not a DPST one. So basically, what I did was I went to see what banks were included in DPST, and then I kind of just picked like a random bank, and just to see if it was going to work out. So I mapped out WAL according to this, right? So we got WAL, and with WAL, I said that price should start to break out, and we should actually get to like $68, if not higher. We broke out. We went to $67, $67.04, and then had a pullback. So by me knowing that DPST was breaking out, I said that I'm going to take one of the tickers that are involved in DPST, and take the trade on that rather than take the trade on DPST. So let's go back to Monday. Here's Monday. Tuesday, we get the pullback. Wednesday, it took off. That was the FOMC call. Thursday, still had the momentum. Friday, we got the pullback. Right? So what else we have on here? Lockheed Martin, LMNT. Lockheed Martin, in my opinion, we have this possible inverse head and shoulders here, right? This left shoulder is building out a little more than the right shoulder, and that's all good and well. To me, right here, we have this indecision candle down here, and I want we'll push through this fair value gap here that was created and end up back above this candle right here. So this fit 454.19. That's the high of that candle. My opinion is that right now I like to call these consolidation buys. Somebody else might call something else. Might call it the power of three. And I believe the power of three is something like manipulation, consolidation, distribution. So the manipulation would be price going in a direction that doesn't matter, or that the wrong direction. Then you got the consolidation where price is just hanging around, and then the distribution is when price shoots out in whichever direction it's supposed to go. So I want to believe that Lockheed Martin is about to take off, and my target for Lockheed Martin is up here at 520 roughly. My first target for Lockheed Martin is like around 470. So with these plays like this, these are the type of plays that have a better risk to reward to them if you get in before the party. And I like to try to get in before the party. So sometimes you got to deal with your option going red for a little while, or it might fluctuate red and green, red and green. If you just keep an eye on what's going on, then you should be pretty cool to through whatever position you're holding. So if I were to say I'm going long on this, I would take a long call, and this would be my stop loss, right? Like 438.72, something like that. Because I don't want anything that's below that. Anything that's below that, in my opinion, I'm looking for short rather than the long. So if I can get into this long right now from here and say that it's going all the way up here to 430 or 420, wherever it's going, and I can get into that short right now with time, then there's a possibility that I got in first, or I got in with the group of people that are getting in first, and I can ride this play all the way up to the further target. And on the way up to the further target, then I can take short term options and hedge the play all the way through. So if it's going down one day, but I got this long term play going up, I'm not going to sell the long term play going up. I'll buy puts more local to the period that the trade is happening in at that point, if that makes any sense. Um, these are the plays that I did get messed up for the triple witching or the quad witching day the other day that happened. And these were just a little overthought. So let's check them out real quick. We can go to the SPY real quick. And one thing that I did was I use all types of different tools when after I analyze a chart. So I'll analyze the chart first, and I'll use the tools on top of the chart. That way, I'm looking to be the indicator. And I'm sorry if this is a little bit choppy how I'm delivering it, but I'm looking to be the indicator. So if I want to be the indicator, I have to know how to trade without the indicators. So most of my charts, you're going to see barely any indicators, if one, because I want to see everything ahead of the indicator, and then I want to put the indicator on for extra confluence. I don't want to use the indicator to tell me this is a good trade or this is a bad trade, because all these indicators are man-made. So once you can figure out how to be the indicator, then the indicators that they provide just give more confluence to the trade, if that makes any sense. So with the SPY, we had this part of the trade going on, and it's just funny to me that I forgot what I had here on the screen, right? So on the screen, we had this pitchfork, right? But because I was looking at a smaller time frame and I was looking at it like this, right? My whole thought process was I'm just looking at a regular chart. I'm looking at further out time frame where I can see everything. By me not being able to see everything at the time, I'm looking at the chart as if this black screen is just my regular chart, right? So I wasn't thinking about the possible bounce off the pitchfork lines when I put this all together. So if I go back to regular time, which should make a little more sense. We have this. We got this. Now I never care about like wicks, and for the most part, I don't want to say I don't care about them, but for the most part, we don't worry about a wick more than we worry about like the close of the bars and all that, right? So as you can see, we had this gap up, and this looks like an exhaustion gap. Then we gap down, boom. I want to say that we're probably going to gap down again on Monday, boom, right? And then from there, we might get a bounce off of 467 up, or we could come down a little further down to 460, 465. So I bought shorts for 464, 65, thinking that Friday would have moved faster because of the option expirations. So we could definitely be heading down to 460, 465. I just played it too short of a time because I over anticipated the move, right? And that's what we don't want to do. We don't want to over anticipate anything. And if we do over anticipate, then we want to play with time to make sure that we have given the stock time to get where it has to get to. And I used to have more of an issue with that because I would see a chart like this, and this is a 15-minute chart. So we know in 15 minutes we're gonna fill this up a couple times probably and bounce out of here. But out of this 15-minute chart, if I just slide this cursor down, it already took until 3 p.m. just to get to this section. If this is going up and down and bouncing all the way down to this tip, we just took from here to 3 p.m. Right? So say that these plays take time to develop and that they're not just going to happen overnight or within the same day and be done. So things take a little bit of time to develop, and it's not just okay, next bar should be down here, right? Or this should just straight drop down. We have a whole day that this play could take, or it could just drop straight down. But what happens if it drops straight down and it hits this trend line and it remains here? It's going to bounce in this trend line. So even if it did have a moment where it just dropped straight down, we still have more of the space to fill up, and that takes time. So that could have been my error on what happened with the SPY on Friday. Um, let's check out Nvidia. And then we'll probably check out Tesla from Friday. So Nvidia, I did change up a couple lines on here and a couple other things. And let me take these purple bars off of here. So Nvidia, I overthought it, right? And this should have been my top play for the last month, something like that, last month and some change or something. This should have been my top play. So called out this right here, right? And I said that at this point, the drop. It was gonna come from here. This was earnings, right? I said for earnings, we're gonna drop and come down to right here. That's exactly what I said we were coming. The 450. I said 450 451.05. We ended up dipping just a little bit below that, but 451.05, right? Boom. After 451.05, I said NVIDIA is going to beat this 502 area, in my opinion. And the next stop for NVIDIA was going to be right here. And that is 538.36. Looks pretty promising from right here. But again, like I was saying, getting caught up in the small side of the play, which was, oh, let me try to catch this short, wouldn't make sense if I have a bigger target at 540, right? So my mind frame was, let me catch this daily short, which was right here, right? So this was Friday, right? Or this is Thursday. And then Friday came along, we bounced out of here. Now, my thought was that we were going to come back down to test this line right here. Now, the only reason I thought that was if I take this trend line right here, right, then we kind of got this wedge, right? Not this wedge, this well, I can't even use up there because that didn't happen yet. But right here, right, we kind of get this boom, right? So I was thinking before I saw that this was an ascending triangle, I was thinking we were going to hit here, come down here, and go back up and probably break out after that. But what really was going on that I was that this was an ascending triangle, right? We break out of the triangle, we retested the triangle, and then we broke out again. That's what the pattern that was showing after I went back and said, what's going on? Like, where did I mess up at? So right now we broke out of we bounced off the ascending triangle. Boom. This guy right here has a, I don't know, some type of breakout. We can call this another, like a triangle wedge or something. Boom. After that, we end up here, and this is another. I would call this a bull flag, right? Or it could be a bear flag, or a flag that's not going to work out, right? It's going to break down. We find that out by adding like RSI and what other indicators down the bottom that you're going to use, the tricks, the TTM squeeze, all of those will help us say, okay, this ticker is possibly to go down, right? So if it's possibly to go down, then where do we want to look at for profit taking? So right here is a good place to look at this ticker coming back down to for a profit real quick. So 482. Right now we're at 488. 482 comes around. Boom. And then we might consolidate a bit and then shoot up to the next level. Right? So NVIDIA should have worked out from start to finish. Right now, probably about, I don't know, one trade off of being correct on NVIDIA this whole run. So, like I said, we came from, we called that out immediately after hitting here. Even if it hit here first on the red, back up and did this. I remember this whole situation. But in the moment, you're kind of not thinking clear enough to hop into it for the right reasons. Instead, you're still going to be looking for the reason why you shouldn't get in it, even though the whole play added up already as to why you should get in it. So I think, like I said, we get this bounce, we get this pullback right now. We're either going to bounce here on 483.55 or it's going to come down to 477 and then we get the bounce up. Right? Tesla, we talked about that already. The DXY. DXY is used as a gauge to see how the market is doing. DXY usually goes up and it has a reaction to the SPY, where the SPY may pull back for a second. Now, it's not always true, but that is like a huge possibility that when you see the DXY going up, then the SPY more than likely is going to have a pullback. And if you see the DXY going down, then more than likely you're going to see the SPY make a push for whatever next level is in line. Then we went back to BLK, right? Right. So let's go back to BlackRock. This was a short on BlackRock that I was trying to call out, but I don't. It may have. It may have. Pardon me. It may have. Let's see. Right. So could have took like a little partial short on the DXY. Boom, it dropped down here after that gap down in the morning. So that's 790. And that was 790 from 798, 799. So roughly got, what's this? 798, 799. That's only $1. I'm sorry. 789. 789. So that's like what? Maybe $11. So that was a nice move to catch on Thursday. And then here's the other one from Friday, right? Well, this is the Friday move, right? So Friday comes down, hits 793, bounces back up, rejects again, comes back, hits 793 again, and then it goes off. So this could possibly be a double bottom that might play out again and go up again. We just got to stick around to see. This was also alerted on Friday, this IOVA. And IOVA, at the end of the day, ended up going to $8.50, which is this order block here. But my ultimate target for IOVA is $9.33, give or take. American Airlines, not really going to get too into it, but American Airlines will go down to the monthly. certain stocks I just like to trade further out than very close because I just like to deal with the shares and the safer bet. So this is another one of those shares in safe bets. It's American Airlines. Um, Once we break out of this channel at $18, you can buy shares if you have that capital, or you can get this $36 call, $35 call. But you're gonna want to play this out for many months, maybe 6 to 8 to 10 months, right? And just let it develop. Zime or ExxonMobil. Just had this breakdown on Friday, but it recovered well. So if I zoom into that one, here it is right here. And this right here is considered a Harame baby, right? So if you're looking at what a Harame baby is, that could possibly tell you what the next move is out of this move. After that, we got Disney, and we got QQQ. So let's go to Disney real quick. So Disney, I made a big like joke out of all this stuff. Like if you were to see the whole thing, you would say, okay, this kind of resembles Disney World, right? Or the Disney Castle. Then we had this downtrend channel right here. So out of these channels, we get like explosive moves. So this right here, I like to call this like consolidation and not just a downside. And whenever I see consolidation like this, I'm always wondering when the stack is going to take off or break down. So if we were to come here, we see that this out of this, we gapped up. Then we gapped up for the second time here. And now we settling here, right? So now we got an ascending triangle. Boom. Broke out. Came back to the top of the triangle to retest it. And then, in my opinion, we should break out again, maybe to $97. If we don't break out again to $97, this is a fair value gap right here. The next candle should come in there roughly, and then again break out again and go up. So that was QQQ. I mean Disney, and this is QQQ. And let me go back to Disney real quick because I said that it had a target and all this stuff. I said $97 on the target. On the bounce of $93.50 or $93. And what do we have here? We have a close at 93.46 and we had the high at 93.95. So we closed below my point to go long, but we also broke these pivot points, which possibly says already that this is just a pullback and we're getting prepared for a bounce to go long. All right. Then we got the QQQ. That's the last one I got for y'all. QQQ broke out of this downside wedge. Then we had a gap up. My first thought was that this was a round and top, but from further investigation, I've come up with this downside wedge, right? And this downside wedge created this whole move up here. Now, there's a bearish fair value gap right here on the day. And I would expect before we go any higher that price has to come back here, retest this fair value gap and go. Now, this tested this fair value gap. But I'm not sure if we're going to just keep rolling out or if we'll come back to this bear flag and then roll out again. So overall, this is like a little longer winded video, but feel free to scroll through it and check on just the things that you traded. And I'll see you again tomorrow night.